What's up, guys? Welcome back to another video. I'm glad to see you guys back here with me on another video. This video we're gonna go over why retail trading does not work. Now, I have covered this before in a later video. It's like I think it's one like my first video that I recorded, but to expound on it more and go over it more, and just to revise it for you guys so you guys get the point. On why retail trading doesn't work, because on this channel we trade smart money and Wyckoff, and I want you guys to know why we trade smart money and Wyckoff and why we don't do retail trading like support and resistance and trend lines and all that stuff. But before we get into that, the Discord server for the community is launched. I made a separate video about that, talking about all the features and everything like that, so I'm not going to get too much into it. If you want to join the Discord server, you can go watch that video. It's like the last video that I recorded and I posted on this YouTube. It's there. If you guys are interested, go ahead and join. First of all, what I wanted to go over is some of the common retail trading things. Like you got the patterns, and we all know the patterns, heads and shoulders and all that. We got let's start off with one of the patterns. We got double top, right? We got a double top. Now, usually what happens in a double top, you have a high, and then supposedly this high is supposed to hold, and this area is known as resistance. So this area right here is known as resistance. When you see a high react off of a certain area, it's known as resistance, retail trading wise. But usually it doesn't happen this way, right? You have a double top, and it's called an M. You have the M formation, and then you have a W formation, right? So basically you're supposed to enter here with your stop loss somewhere underneath here. That's how the retail trading thing goes for the M and W pattern. So usually what happens with this thing is when you have this, you have an M pattern, right? And you enter right here with your stop loss above. The market will do this and then go down. I know I've seen people with instances that this has happened, because I used to do these M and W patterns, and this is exactly what happened, right? So, and it's the same thing opposite for the W pattern. It looks like something like this. You have a W, is supposed to enter right here. Your stop loss is below here somewhere. The market gives you some profit, go down, ends up coming back to the upside, right? Now, in my eyes, despite the M and W pattern right here, I can just see a easy type 2 accumulation distribution, right? A grabbing liquidity, taking out this high and that high. This is known as liquidity, your money, and then this is the manipulation, right? Same thing that happened here. You have this low that created liquidity, this low that created liquidity, money down here, manipulation, the market continues to the upside. It happens every single time. The market will manipulate before they move. They have to fill the banks have to fill those orders in, and that's we're gonna, in the second part of the video, we're gonna like talk about this. We're gonna explain why that is and why this manipulation happens, because it's basically it's how the banks trade. Another one that we can go over is trend line, right? You have something like this. And this is known as a trend line, right? So basically what you're supposed to do is you're going to enter down here, and the market is supposed to respect this trend line, correct? All right, so that's what's supposed to happen retail trading wise, right? But what usually happens is this. You have a trend line forming. The market will do this and then go to the upside. Why? Because this trend line is liquidity. There's people buying underneath here. This is just to build a liquidity that the market is building, and they will come down here and take it before they continue moving to the upside, right? So that's just showing you. And if you go into markets yourself, you're gonna see this every single time. This is just known as reaccumulation. This right here is known as reaccumulation, okay? Now, I'm not trying to knock down retail trading and saying that it's impossible, right? But retail trading is inconsistent, right? You don't have a consistency in retail trading. The stop losses are too big. You don't know where to place your stop losses. It's like it's too much room for error in retail trading, right? That's what causes you to lose and lose and lose. You might get one win, but the losses doesn't add up to how much wins you get, right? It's the risk to reward from the losses to the win is not probable. So it's hard to be consistently profitable when you're trading just retail, because most of the time you're either going against the market or you're setting yourself up to be manipulated by the markets, right? And I'd rather try to trade with how the markets actually trade than try to set myself up to go against the market and be manipulated. Okay, so that was just a basic form of retail trading. Now I know there's other ways of, indicators, and you got all those stuff. And indicators, you don't need indicators to trade the market. The only indicator you should really use is volume. You can use volume. All right, volume is a good indicator. And I know you can use RSI too. Don't put your whole basis on the RSI. You can use it to help you, but you don't really need those. Okay, pure price action, that's the best way to trade. Pure price action, because when you remove all those noisy indicators, you can actually see what price is doing, right? Because price will tell you exactly what it's going to do before it does it. All right, that's why we have the stage of accumulation. When we have these highs and these lows building like this, we have a process of accumulation, right? So from our view, we can tell that the market is slowing down here. So we know that the bearishness has slowed down. After the bearishness came like this, the market has slowed down. That's a clear indication that sellers are starting to get out of the market. You don't need an indicator to show you this. The charts and the markets are showing you this. Okay? It's the same thing for distribution. You have a bullish price action. Then the market starts to range and slow down. What does this tell you? This bullishness is beginning to slow down. It's beginning to become weak. So that means what? Sellers are beginning to come in the market. When the market moves in, the market always ranges. It ranges, expands, ranges, expands, contracts, expand. It's the same thing. All right? The market will always range. And those ranges are phases of either accumulation, distribution, reaccumulation, or redistribution. It's nothing different. All right? All right, so I'm not going to sit here and read all of this, but let's go down to banks trading strategy. Okay, so we have right here, Forex watchers have observed that while institutional traders use many strategies, their trading decisions can be categorized in 3 phases. What are those phases? Accumulation, manipulation, distribution. All right, accumulation, an accumulation of orders. All right, manipulations, that manipulation that I showed you guys, where it manipulates the highs and the lows, takes out liquidity, takes out the people and fill in their orders. Distribution, that's them getting out of those accumulated orders and them reaching supplies. Okay, so it's stated right here: accumulation, manipulation, distribution. You as a trader, what do you want to do? If you want to become a consistent trader, if you're really serious about trading, this is how you become profitable. If you're really serious about trading, right? You as a trader, you have to learn these things. You have to learn what accumulation is, how to spot accumulation, how to trade accumulation, what manipulation it is, how to spot manipulation, how to trade distribution, what distribution is. You have to learn these things, right? And it's not easy. Like these concepts, they're not easy. They're gonna take a while to learn. But if you're serious about becoming trading, you're gonna devote that time to learn these things. Okay. All right, so let's go over behaviors, characteristics of banks, right? So it states right here, the banks, they trade with hundreds of millions of dollars. We know this. We know that they are the essence. They are the market drivers. They move the market, right? And we know that the banks, they trade higher time frames. They're not trading those 1 hour, 2 hour, 3 hours, 4 hours, even daily. They go weekly and monthly. They are positional traders, right? So we know the average trader does not have that much money. Okay, the average trader does not have the same luxuries as the banks to have that, to be able to do stuff like that. But they can make moves, as it says, make moves based on how banks and other market drivers move, right? So what does that mean? If you learn what accumulation, manipulation, distribution is, you can spot that before the banks make that position, before they enter that market, you can spot that to be in the same ride as them, right? So you can spot that accumulation, to trade that accumulation with the banks, knowing that the market is going to drive towards the upside because the banks are in the market, right? That'd be the smartest thing to do. But you know, of course, that it is impossible to trade exactly how the banks are doing. So that's where those losses come in. And like, even with smart money and Wyckoff, there's going to be losses, right? There's always that manipulation. There's always that the banks do not want people to trade with them, right? So however, they can't avoid that accumulation, distribution, and manipulation taking place, right? They can't, because they have to do that in order to move the market. So they can't just like be like, okay, we're not going to do this no more, right? They have to do it, right? It's a way that we spot that they're in the market, okay? But you can't go off the basis that, okay, just because I'm trading like this, I'll never take a loss, right? You can't have that mindset. You're gonna take losses, okay? You're gonna, especially when you're starting out, you're gonna take losses, because some things, they're gonna be not as clear as you thought it was, and some things are gonna be more difficult to learn, okay? But while you get through all that, while you're taking those losses, you're gonna learn a lot of things, okay? Those losses will turn to you learning way more than what you thought you knew. Then you can be prepared for when you see certain stuff in the market. So with that, guys, the link for the Discord is in the description. The link for the Discord is in the description, guys. You know, one thing I want you guys to do is comment down in the comment section what videos you want me to make. What do you guys want to see? So, you know, I can keep these videos coming out for you guys and keep educating you guys and helping you guys. All right, so peace out.